Good morning. In today's class, we are going to see the problem number 21 in financial accounting, final accounts. Yes. So problem number 21. The question is the following are the balance sheet balances extracted from the ledger of Karigalan as on December 31st, 1993. So final accounts. For preparing final accounts, we need to prepare trading account, P&L account, that is profit and loss account, and balance sheet. First, we need to segregate the expenses according to their basis. We need to identify the expenses which has to be posted in the trading account and then for the profit and loss account. Finally, the overall accounts and the assets and liabilities will be furnished in the balance sheet. So today we are going to start with trading and P&L account of Karigalan for the year ended 31st December 1993. So here they have given you the balances, that is which expenses which has been incurred in the in the business, and then the following adjustments which has to be followed by the business. So first we are going to proceed with trading and P&L account. So first trading account to be started with the opening stock. So opening stock is nothing but whenever we start a business, we need to start with the stock. So we open the trading account. So all the expenses which is regarding the trading process has to be entered in the trading account. So first we will start with to opening stock. So in balances, they have given you the value as 12,500. That is in your question. Yeah, opening stock. Next, after opening stock, we need to purchase raw materials. So in question, they have given you the purchases. So purchases value is 75,000. You can drop the values in the outer column. If you got any adjustments, you can post it in the inner column. After making the calculations, you need to post the values in the outer column. Next, after purchase, we need to pay for the wages for the labors. So two wages. So two wages, and simultaneously whenever you post expenses in the account, you need to check for the adjustments. So we are going to post wages. We have adjustments in the question. So they have given the outstanding wages 600. So to wages they have got outstanding. So you need to add the outstanding. Add outstanding. Outstanding wages. So your wages value is 7,500 and your adjustment value was 600. 600. So the final amount, that is 8,100, will be posted in the outer column. Next, after wages, we need to check for the expenses, any other expenses which has been incurred before the incurred at the time of trading. So when we check into the question, we have got carriage inwards. Carriage inwards. So carriage inwards will take place in the trading account. To carriage inwards. To carriage inwards, the value was 2,500. And then after carriage inwards, again we need to check if any of the adjustments has been given. So here they have given that duty paid on purchases. So we need to enter that is regarding the purchases, they have paid some amount. So that is the duty paid on purchases. So anything related to the trading has to be recorded. Duty paid on purchases. Duty paid on purchases, value they have given 15,000. So other than that, we have recorded all the expenses which has incurred in the trading. So now we are going to post the items in the credit side. So credit side is nothing but the incomes which we got for our business. So we need to record the incomes which is the main source for our income. So first we need to, the main source for the business is sales. Whenever we do sales, we will earn a profit. So with that profit, we will be running on our business. So we need to start with sales. Sale value and the adjustment they have given sales return. Some values, that is some goods has been returned to the respective owner. So we need to reduce the sales return, the goods which has been returned. So the sales value was 1,25,000 and the returns value was 5,000. So after reducing it, the balance to be entered in the outer column, that is lakh and 20,000. And then we don't have any incomes in the business, so we need to close the account by putting closing stock, trading account. So we need to close it with closing stock. So in closing stock has been given in the adjustment, that is 14,000 to be entered in the outer column. Yes. So mainly while preparing this final accounts, there are one major important thing which you need to follow it. So whenever you are going to prepare and final accounts, the adjustments, whatever the items given in the adjustments, will appear twice in your in your account, in your account when you are entering the document. So you need to be sure that that items which has been given in the adjustment has been entered twice in your account. So first, uh, now we have entered all the items. Now we are going to close the trading account by totaling the both sides. So credit side we have got 1,34,000. Same thing, same value should be adjusted with the debit side also. So in debit side, if we add all those outer column items, we will be getting around lakh and 10,000. So if you reduce those value with this 1,35,000, you will get 20,900 as your balance. So that 20,900 will be your two gross profit. That is the temporary profit which you have been till now you have not uh, you have not produced any product, just you have entered the uh, expenses which has been incurred in the trading alone. So this is the temporary profit, that is an assumption profit which you can earn. So based on this, you what you have to do is you need to proceed to the next level. So this is gross profit carried out. So this is the second stage where we are going to proceed. So, while preparing the profit and loss account, you need to start with your gross profit, which has to be brought down from the trading account by gross profit. It is an income, so I am posting it in the credit side. So, by gross profit brought down. So the value was 20,900. So now what you have to do is you need to enter all the expenses which has been incurred at the time of making at the time of your uh, producing producing the products or producing the materials. What are all the expenses which has been incurred at the time of production, it has to be entered. in the profit and loss account. So first we are going to start with interest. So whatever the other expenses which has been kept, it has to be entered. First they have given interest. So interest they have given you, they have given adjustment. If you look into the adjustment column, you can see that. So outstanding wages. So interest value is 375. Outstanding is 75. So when you add both, you will get 450. That has to be posted in the outer column. Next expenses is salaries. To salaries. So for salaries also you have got adjustment, that is outstanding salaries. Outstanding salary. So salary's value was 4,400 and your outstanding is 400. So if you add both, you will get 4,800 to be posted in the outer column. So after salaries, you have got rent. To rent, add outstanding rent. So the rent value is 2,750 and your outstanding is 250. If you add both, you will get 3,000, which has to be posted in the outer column. Next, they have given you the traveling expenses. To traveling expenses. So to traveling expenses, we don't have any adjustments. So we are posting the amount directly outer column. Next, to postage. To postage, they have given 135 to be posted in the outer column. Next, to rates and taxes. To rates and taxes, they have given you 90 to be posted directly in the outer column. Next is to carriage outwards. So carriage inwards has to be posted in the trading account. Carriage outwards has to be posted in the P&L, that is profit and loss account. So carriage outwards they have given you 750 to be posted directly in the outer column. Next is to general expenses. To general expenses, value is 900 to be posted in the outer column. So we have entered all the expenses which has been given in the respective account. So now we are going to check once again with the adjustment. So we have entered the expenses, but also we need to check the adjustments and you need to post the adjustments relating to that. So first one is closing stock, which has been already entered in the closing stock. Second one is the outstanding expenses. So for salary, rent, wages and interest, we have entered the outstanding. Next, they have asked to maintain the reserve for doubtful debts. So they have asked you to create reserve, discount on debtors, and 2.5 percentage on sundry debtors. Next, you need to provide depreciation. So all these expenses will take place in profit and loss account. So now we are going to proceed with the provision. So first, two bad debts which has been in your given in the question. Two bad debts. Value was 300. Post it in inner column and then you need to add new provision and less old provision which has been given in the adjustment. So add new provision. So new provision, they have given you 500 and less old provision. Old provision has been given in your question. New provision has been given in the adjustment and old provision has been given in the question. So old provision value is 400. So you will get, when you calculate this, you will get the final answer 400 that has to be posted in the outer column. Next, you have to create discount on debtors. So this new provision, how you need to calculate this. Here they have given you the maintain the reserve for doubtful debts at 5%. They have specific, they have not given any values, they have given the percentage. So I have here I'm going to calculate this new provision. So new provision is equal to, they have 5% on debtors. So you need to calculate that. You need to find the debtors value. So the debtors value has been given as 10,000. So 10,000 into 5%. 10,000 into 5%. If you calculate, you will get 500 as the new provision. So it is the information which has been given in the adjustment. So according to the adjustment, whatever the percentage has been given, you need to calculate in the respective values. So the values has been given as 10,000. In 10,000, you are going to calculate 5%. So your new provision value is 500. So old provision they have given you in the question. Reserve for bad and doubtful debts 400. They have given you in the question. So we have posted that 400 directly. So again they have asked you to calculate the reserve for discount on debtors. To new reserve for discount on debtors. So you need to calculate they have given you the discount on debtors percentage, that is 2.5% on sundry debtors. So what you have to do is you need to calculate, in debtors value, that is 10,000 into 2.5 percentage. Before calculating that, you need to reduce the reserve value and you need to calculate it. So your value will be 237.5. You will be getting the values in points. Then you need to reduce the old reserve which has been given in your question. Old reserve, old reserve for discount on debtors. This has been given in your question. So old reserve they have given you 200. So after reducing it, you will get the balance value 37.5, which has to be posted in the outer column. Next, so regarding the reserves and provisions, we have placed all the adjustments. So now we are going to proceed with the depreciation. So to depreciation. Depreciation. So first they have asked to calculate on buildings. First item has been given as buildings. Buildings at 2.5 percentage. So how you need to calculate this? So buildings is equal to, so buildings value was 10,000. 10,000 into 2.5 percentage. So your value will be 250. So likewise, you have to calculate depreciation for all the items which has been given. So buildings 2.5 percentage, the value is 250. And then machinery. So machinery, they have given you at 10 percentage. So your machinery value is 2,500. If you calculate 10 percentage, you will get 250. 250. Next, you need to calculate it for furniture. Furniture at 6 percentage. So your value will be 36. And then cycle. Cycle at 15 percentage. So the value is 60. So why we are calculating depreciation is, depreciation will be calculated only on the fixed assets. It will not be calculated on current assets. So fixed assets has been used for over more than some period in your business regularly. So whenever you are using your fixed assets, the value of the asset will be reduced. So we may make repairs to that particular asset, or we will be doing any changes, we will be giving for services, something like that. So asset value will be reduced when according to the years. So that for that purpose we are calculating this depreciation. So depreciation will be calculated only on the fixed assets. So we have posted everything, all the expenses and the adjustments which has been given in the question. So now we are going to tally the account. So we are going to close the account. So your total value is to 20,900. This is the balance value. So what you are going to do is, you need to tally it with the debit side. Tally the amount with the debit side. So to net profit. So by totaling all these values, outer column values, you need to reduce those values with the 20,900. That is with your gross profit. If you reduce it, you will get the net profit as 8,491.50. This will be your net profit. I have highlighted this value so that it will be easy for you to identify. So total value I have highlighted with red. So we have received net profit as 8,491.50. Yes. So now we have placed all the expenses in the trading account and also in the profit and loss account, and now we are finalized with the net profit. So now we are going to proceed with the balance sheet. Balance sheet is nothing but it is the assessment of assets and liabilities which you are maintaining in your business. So you need to categorize every year whenever when there is a posting period, you need to finalize your assets and liabilities. So all the time it has to be equalized. So assets and balance should be equal, so that when if it is equal alone, you can proceed your business with a good proper function, or else you need to face the consequences in future. So what you have to do is you need to rectify the errors whatever you have made in your business before finalizing with the balance sheet. Yes. So now we are going to proceed with balance sheet. So first we'll start with liabilities type. So liabilities, so we need to start in liabilities. We have our own sources, that is capital, which is the main source for our business. So first we are going to start with capital. So capital they have given you in your question, it is 20,000. We have net profit, that is an additional income for you. So net profit, you need to add your net profit, it is an income. So net profit value is which has been calculated in the P&L account, that is profit and loss account, that is 8491.50. Next, we need to reduce our drawings. Drawings is another expenses which has been extracted from the capital, so that has to be reduced. So drawings value is 350. So after calculating all this we will be getting 24,991.50. Use your calculator to calculate the values. So we have finished with the capital. Next, we are going to place all the liabilities which has been given in your question in the liabilities side. That is the items which earns you the profit in future or in present. So those items will be recorded in the liabilities side. So they have given you the long term borrowings in your question. So long term borrowings value is, that is loan. Long term borrowings, under the head long term borrowings, we have loans. Value is 5,000. Next is current liabilities. Under the head current liabilities, we have sundry creditors. Sundry creditors, it is an current liability. Value is 7,500. And then we have, these are the items which are the liabilities which has to be posted. So in starting of the problem itself, I have told you that whatever items which is given in your adjustment has to be placed twice in your final accounts. So we need to be sure with that we are posting the twice in the final accounts. So first we are going to post outstanding salary. So salary adjustment has been made in the P&L account. So we are going to post the same items twice in the liabilities, that is in your balance sheet. So first, outstanding salary. The adjustment amount only to be posted here. The amount which has been given in the adjustment, that amount to be posted in the balance sheet, not the value which you have calculated. Second one is rent, outstanding rent. The value was 250. Next is outstanding interest. The value was 75. Next is outstanding wages. Outstanding wages we have calculated in trading account. Yes, outstanding wages. So we have got we have placed all the liabilities items in the balance sheet. So now we can proceed with the assets. So first, assets, you need to start with fixed assets because fixed assets are the main source for our business. Based on the fixed assets, we can also claim for a loan. It yields a once in a while. If you if you have this fixed asset for a period of years, you don't want to buy the machinery or some assets which has been used for the production purpose. So it is a one-time investment. More or less 10 to 15 years or 20 to 30 years, it will not adjust. You need to make some repairs alone. Unless then, you need not to buy any new assets. So first we are going to start with asset. First with the building. It is a fixed asset. So for building, we have created depreciation. That is first time adjustment in the P&L account. So second time adjustment has to be posted in the balance sheet. So building less depreciation. So here what you have to do is you need to calculate the final value. You need to place the final value of your asset. So your building value was 10,000, your depreciation value was 250. So your outer column, the value is 9,750. Next is machinery. Machinery, we have got depreciation. So machinery value was 2,500. The depreciation value was 250. So the final value was 2,250, which has to be placed in your outer column. Next one is furniture and fittings. So furniture and fittings, we have created depreciation. So furniture value was 600. Depreciation we have created is 36. After reducing the depreciation value, place the final amount in the outer column. After furniture, we have got cycle. Cycle is a fixed asset. So for that, we are going to calculate depreciation. So cycle value is 400. Depreciation is 60. So balance 340 to be placed in the outer column. So first, we have all completed with the assets, that is fixed assets. Next, we are going to proceed with current assets. Current assets. We have got. So first, we'll start with debtors. Whatever assets, current assets can be posted here. So sundry debtors. So sundry debtors, we have got reserves, discount on debtors, everything. So we need to reduce all those. So first, we are going to do with reserve for debts, doubtful debts. So your sundry debtors value was 10,000. Reserve for debts which we have calculated is 500 in the adjustment. Adjustment they have given you 5 percentage on debtors. So 10,000 into 5 percentage, you will get 500. Yes. So next you are going to proceed with discount on debtors. You need to reduce the discount on debtors value. Discount on debtors. That is 2.5 percentage on the 9,750. So you have got 237.5. After making the calculations, put the final amount in the outer column. That is 9,262.5. So this is the final thing. So the adjustments has to be reduced with the respective items. So sundry debtors we have got 10,000. In that first we are going to reduce reserve for debts. That is 5 percentage which has been given in your adjustment. Next, discount on debtors. So discount on debtors we have already calculated in the profit and loss account. That is in the value 9,500, 2.5 percentage. So we have got the value 237.5. So after making this calculations, place the final amount in the outer column. So after sundry debtors, we have got another three current assets. So one is cash in hand, which has been given in your question. So cash in hand, we have got 250. Next is cash at bank. Cash and bank, they have given you the value 2,400 in your question. So we have placed all the items, and finally we are going to close with closing stock. So closing stock has been given in the adjustment. The first adjustment has been placed in the trading account. The second time it has to be posted in the balance sheet. All the time assets has to be closed with the closing stock. So closing stock value is 14,000. So now we have finalized all the items which has to be placed in the balance sheet. So we have made the assets and liabilities and the adjustments which are meant for the expenses. We have also framed those adjustments in the balance sheet, and we have finalized the balance sheet. So now what we need to do is we need to tally the balance sheet. Tallying the balance sheet is nothing but we need to have the same amount in both side, debit side and credit side. That is liabilities and assets. So all the total value should be same. If it is same, your problem is correct. That is your business is going on in a proper condition. There is no any other flaws in that. So you can proceed your business with the same thing. If your balance sheet has not tallied, that if there is some differences in your values, means you need to go and check whether where we have made a mistake, we have missed out some items, or we have misplaced some item, something like that. So we need to find the problem where it is. So the total value of assets and liabilities is, if you total all the thing, you will get 38,816.50. 38,816.50. So this is the same amount. So assets and liabilities, if you add both, you will get the same amount. So you know your balance sheet has been tallied and your business is running in a good proper condition. Yes. So now we have finalized with the balance sheet. So this is how the final accounts will ends. Thank you.